Hello, welcome. I'm so sorry. I just had to run downstairs. My brother stopped by to get something. I was like, I gotta start the webinar. So I'm so sorry. So welcome. Hope everybody had an amazing day. Okay, so on today's webinar, what we're gonna go through is I promise you guys the top 3 things that you absolutely have to know this tax season, right? The top 3 things that you absolutely have to know this tax season. But before we get started, a little bit about me. Okay, my name is AmmaTheCPA. Most of you guys know me as AmmaTheCPA because I'm a certified public accountant. And what is a certified public accountant? So that's actually it's the level that you can achieve in the field of accountancy, right? So you go to school and then you have to go to like a 5th year of college or get your master's, your master's in accounting, and then you can sit for the exam. So my thing is really just helping people and serving the public. My mom is actually retired educator, and my dad is a retired IRS agent. So I get the best of both worlds. I love to give back, love my service, but at the same time, I always had a passion for numbers and crunching numbers because, you know what they say, numbers don't lie, right? Numbers don't lie, and it's so true. When I was in school, I never liked the whole concept of black and white or kind of gray area where you're like, oh, what is this interpretation? What is your interpretation? It's like, no, numbers are numbers. They're right or they're wrong. It balances or it doesn't. Okay, so that's just a little bit about myself. So in this webinar, what we want to go through is how you can give yourself a raise without your boss's permission. Okay, so that's so exciting. And what we're going to do is we can go through the W-4. Now, statistics actually show, and this is right from the IRS, that over 100 million Americans have their W-4 filled out incorrectly, which means that 100 million Americans are overpaying their taxes. So the W-4 form, that's the form that you fill out when you first start your job, right? A lot of us don't even pay attention to it because we have so many forms when we first get a new job, right? You have all, different compensation, different employee benefits and things like that. So you don't know what's what. So we have all these different forms. And a lot of times we'll be sitting there with human resources and we're just filling out these forms and they just say, okay, how many kids do you have? Okay, so you got 1 kid and it's you, put a 2 right there. That's completely incorrect. So what we're going to do is I'm going to walk you guys through line by line of the W-4. And not only that, we're going to go to the back side of the W-4, which a lot of people don't even realize there is a back side. Now, the back side of the W-4 is for adjustments to your income, right? The things that go on the back side of the W-4 are anybody that itemizes your deductions. If you have mortgage interest, real estate taxes, things like that you fill out on a Schedule A, that goes on the back. Also, if you are a home-based business owner, right? If your business is operated and is classified according to the IRS as a home-based business, we get so many tax deductions, right? So this is where you can actually account for some of these deductions in advance. So we're going to go ahead and get started, but I'm going to give you guys, as promised, the top 3 things that you absolutely must know this tax season. Okay. Number 1, the first thing I should say number 3, the main things I want you guys to know is that stay away from the rapid refund, okay? Now, hopefully we're kind of, none of us on this line are getting the rapid refund or anything like that. But if you know anybody that is interested in a rapid refund, this is what I want you to tell them. It's not a rapid refund, okay? Let's face it. The government does not do anything fast, right? Right? The government doesn't do anything fast. So the rapid refund is actually a loan, okay? And the loan comes from different lenders, right? But what will happen is they loan you the money, and that's why it's so much more expensive than just your regular refund. They loan you the money. Some of these interest rates on these loans are anywhere from like 25 to 30%, okay, annual interest rate that they're charging you for this loan. Now, the first thing that's wrong with that rapid refund is, let's say for whatever reason, something happens and your tax return is not filled out correctly. Okay, let's say you forget a W-2 or your tax preparer does something incorrectly, whatever, things happen. It gets submitted to the IRS, but in the meantime, you've taken this rapid refund. Now, when it comes back that is something wrong, you have to pay back that money plus penalty plus interest. Okay, I just told you guys that the interest is 30%, 25 to 30% on that rapid refund because it's a loan. So you want to stay away from that at all costs. The other reason you really want to stay away from that is because tax preparers, they actually get compensated based on how big, or some of them, okay, some of them get compensated based on how large of a refund they can give you. So it is in their best interest to kind of fudge the numbers, make things up, stuff like that, because it directly relates to, or it's directly correlated to how much money they make, right? So they're going to want to falsify your tax return so they can get this. So if you are in a situation where you feel like you want to get this rapid refund, just remember what I'm telling you right here. And if you're having any type of cash flow issues, you can always reach out to me directly. AmmaTheCPA. Okay, on Facebook, it's AmmaNantwi. It's Nantwi. You'll know because I'm my profile picture is like me on a cruise ship, right? With one of the big floppy hats on, or on Instagram, I'm AmmaTheCPA. So feel free to reach out to me, ask me any type of questions, especially if it's related to taxes, cash flow, personal finances. I'm here to help. Okay, like I said, I'm here to serve. So, but stay away from this rapid refund at all costs. Okay. The second thing that I want you guys to know, so that was number 3. Number 2, what I want you guys to know is that choose your tax preparer wisely, okay? No shots, no shade on anybody, but a lot of times tax preparers, this is the time where people can make a lot of extra money, right? And I'm just not in the business of taking advantage of anybody or kind of falsifying any type of information to help myself and not help somebody else, right? I don't believe in that. A lot of people, they make extra money, like I said, so they can falsify your tax returns and help them make extra money. The problem is that a lot of tax preparers, this is the season where everybody can come up, quote unquote, right, where they can make a lot of extra money. So it's not really in your best interest, it's more in their best interest. This is a part-time job for a lot of tax preparers, you know, so when you're choosing your tax preparer, you want to make sure that you choose somebody that is really like, this is what they do, right? Not somebody that they just come along during the tax season. Maybe they work at Comcast, maybe they do hair, right? But during the tax season, now they're a tax preparer. Okay, so you want to be careful of people like that. Try to find you somebody that this is what they do. And I can help direct people to find people and things like that. Or actually, I can help people get their taxes done for free. If you want to get your taxes done for free, please reach out to me. You can just send me an email at I need help at AmmaTheCPA.com. Again, that email address is I need help at AmmaTheCPA.com. I'll be more than happy to introduce you to somebody that can do your taxes for free. There's a lot of qualified people out there that can help you. So that was number 2. Okay. And the number 1 thing that I really want to stress and that I really want you guys to know for this tax season is that your taxes are your responsibility. Okay, ladies and gentlemen, I cannot stress that enough. It is your responsibility. So let's say for whatever reason, you get audited at the end of the year. You cannot say, oh, I know this is what they told me to put. I didn't, oh, no. She asked me if I had charitable contributions and I told her $1,000. You can't do that. You can say, IRS is going to say, great, with your documentation, which is even more reason why you really have to stay away from that rapid refund and make sure that you choose your tax preparer wisely, because it's not in their best interest. And furthermore, they are not held responsible. Okay, they are not responsible at all for your tax return. It's your tax return. So just make sure that you choose somebody wisely, you stay away from the rapid refund, and that you have documentation for everything that you write off on your taxes or everything that goes into your taxes. Okay, so I hope that that was helpful. That was the top 3 things that you all need to know this tax season. Again, if you need help getting your taxes done for free, you can reach out to me. Just email us at IneedHelp@AmmaTheCPA.com. And so we're going to go ahead and get started. Now, for this webinar, make sure that you guys jot down any questions that you may have. And I can't hear you, right? But after the webinar, I'll be able to, you can just post your questions in the chat. I'm going to run through the W-4 really quickly, line by line. This is how you can give yourself a raise without your boss's permission. The average person that completes this correctly, they end up with an extra $200 to $500, okay? So you want to make sure that you really pay attention, jot down any notes. If you did not get a chance to download the W-4, you can just pull it up and kind of go along with it. But I will have the copy on the screen so you can see it. So even if you don't have it printed out, just grab a sheet of paper and kind of write down as I go through and total up your correct number of exemptions or allowances. It's the same thing, it's interchangeable. And then let me know afterwards, okay? So we're gonna go ahead and get started. Okay, cool. Okay, so let's get started with line A. For line A, you want to go ahead and enter in a number 1 for yourself. Line B, enter a number 1 if you're single and you only have 1 job, or if you're married and have only 1 job and your spouse does not work, or if your wages from your second job or your spouse's wages or the total of both are $1,500 or less. Then you want to enter in a number 1 right there. Okay, if those apply to you, then you want to go ahead and enter number 1 on line B. So for line C, if you are married, enter a number 1 for your spouse. Now this only applies if you are married and you file a joint tax return. Then you want to go ahead and enter in a number 1 right there. Okay, and that's for line C. Now for line D, enter the number of dependents that you plan on claiming on your tax return. Now, dependents are not you or your spouse, even if they don't work, okay? Or even if you don't work and you're married and filing a joint tax return. Dependents is just people that you are taking care of, mainly children in your home, but also any other relatives that may be living with you that you provide food and clothing for and shelter. So you want to enter in a number 1 for the dependents other than not including you and your spouse that you claim. So put that number on line D. So on line E, enter a number 1 if you file head of household. Now, you know if you filed head of household in the past. Okay, so if you did file head of household in the past, or you plan on filing head of household for this upcoming tax year, then go ahead and enter number 1 right there. Okay, now we are on line F. So for line F, you want to enter a number 1 if you have at least $2,000 of child or dependent care expenses for which you plan to claim. So this is basically child care. This is child care. So if you pay for, even if your child goes to half-day preschool and the rest is half-day child care, then you want to include that as well. So any child care that you pay, if it's more than or at least $2,000, then you enter in a number 1 on line F. Now for G, this is for the child tax credit. Okay, so if your income is less than $70,000 or $100,000 if you're married, then go ahead and enter in a 2 for each eligible child, then deduct 1 if you have 2 to 4 eligible children. So for example, if you have 2 children, then the number would be 4. Then you want to go ahead and deduct 1 if you have, because you have 2 children. Okay, and then deduct 2 if you have 5 or more eligible children. So if you have 5 or more eligible children, then you still include 2 per child, and then you deduct 2 because you have 5 or more children. Okay, now if your income is between $70,000 and $84,000, then you just want to enter in a 1 for each eligible child. And if you're married and your income is between, your joint income is between $100,000 and $119,000, then enter in a number 1 for each eligible child. Now for H, you just simply want to add lines A through G. So I'll give everybody a second to add those lines. Add up lines A through G and put the total on H. Okay, moving right along. Turn to the back for the deductions and adjustments worksheet. So for line 1, now this is where you want to include any, if you file a Schedule A, this is where you want to include if you plan on filing a Schedule A or if you have filed a Schedule A in the past, which is for itemizing your deductions. So for line number 1, you want to enter in the total estimate of your itemized deductions, right? So what you want to do, if you filed a Schedule A last year, then you can go ahead and pull that out, and you want to put the number from line 29 on your Schedule A right here for line number 1. If you did not file a Schedule A last year, if you did not itemize your deductions last year, and you aren't sure what you are going to, you can use the estimate based on your mortgage interest and charitable contributions of the year. Now for line number 2, enter in $12,700 if you're married and filing a joint return, or also enter $12,700 if you are a qualifying widow or a widower. Enter in $9,350 if you are filing head of household. And lastly, and not least, definitely not least, you enter if you are single or if you're married filing separately, you want to enter in $6,350. on line number 2. For line 3, we simply want to subtract line 2 from line 1. Now, if you get a negative number, you want to put 0. We do not want a negative number on that line. So if you get a negative number or less, or 0 or less, if you get 0 or less, then put 0. For number 4, this is specifically if you have a home-based business. You want to enter in an estimate of your adjustments for the year to income. Any adjustments that you have for income. So only if you have a home-based business do you want to fill this in right here, because we can take our deductions throughout the year instead of waiting till the end of the year for a refund. So you want to put either $4,050 or $20,000. So let me explain the difference. If you are new to having a home-based business and you aren't really sure what you get to write off or how much you're going to write off, then you want to put $4,050. If you've had a home-based business in the past, or if you just know, even if you're new to the business and you know that you are going to really work your business to try to generate an income, then you want to put $20,000 on line number 4. Now simply let's add lines 3. For number 5, we want to add lines 3 and 4 and put that total on line 5. For line 6, you want to enter in an estimate of any non-wage income that you have. So basically this is dividends or interest. If you have any dividends or interest or any other non-wage income, then you want to go ahead and put that for line number 6. For line number 7, simply subtract 6 from 5. Line 6 from line 5. Again, we do not want a negative number right here. So if you get 0 or less, then just enter in the number 0. Moving right along, line 8, you simply, let's divide the amount that's on line 7 by $4,050 and do not include a fraction. Now for line number 9, enter in the number that we had on the front that was line H. So go to line H on page number 1 and bring your total to the back side of the page and put that number on line number 9. And now you want to add lines 8 and 9 for number 10. For number 10, add the totals that's on line 8 and line number 9. Add up those totals. Okay, now this is the end of the bag. We do not want to fill out the 2 earners portion of the W-4. So this is it. So for the back side, so now the number that you have for number 10, let's go back to the front. Go back to page 1 and you want to put the amount that you have on line 10 on line number 5, which reads total number of allowances you are claiming. In parentheses from line H above or the applicable worksheet on page 2. So we want to put the number, the total number of allowances that we are claiming, write that number on number 5. And now, ladies and gentlemen, that is it. You can fill in the rest of the information that's on the bottom portion of the first page of the W-4. Your first name, last name, all of that personal information. You complete that and turn it into your job tomorrow. Okay, at this time, we'll take any questions. Okay. I hope that that was helpful to everybody. I see we have a question. Hi, Marilyn. What if you have a home-based business and a brick and mortar location? Okay, so that's no problem at all. The thing with the home-based business, though, is that you get the bulk of your tax deductions because you get to write off a lot of stuff that you would normally pay for anyway. Like, for example, we get to write off a percentage of our mortgage, a percentage of our lights, a percentage of our gas, right? Just from having a home-based business. So me personally, I'm in a home-based business that focuses just on like finances and things like that. So it's kind of right up my alley. But so let's say you have both, right? Because that's your question before I get all off into something else. So you have both. All you'll have to do is take into consideration your home-based business really should be kind of a sole proprietor unless you incorporated your home-based business. And then your brick and mortar business, 9 times out of 10, is going to be like a LLC or a corporation, right? In which case it would be separate. But let's say you have it together, maybe it's a S Corp or something like that, or if it's a sole proprietor, and then you would still file the tax return for your business, but then it flows into the tax return for your personal. So I hope that's kind of answering your question. It's kind of a lot of different ways that you can do it, or I should say it's a lot of different information that I would need to be able to really answer your question. So is that your question, Marilyn, how would you write off both? I hope that was helpful. If you want, you can always email me directly at Amma, that's my name, at AmmaTheCPA.com, and I'll be more than happy to answer any question. Or you can inbox me on Facebook or Instagram, and I can help you out if that's not enough information for your question. I hope that was helpful. Does anybody else have any questions out there? You can go ahead and post any questions that you have in the chat room because I can't hear you, but I can read your questions and respond to your questions like that. So if you have any questions, go ahead and type them out. But actually, Marilyn, I'm not sure if that's Dr. Marilyn, but a lot of people actually do have a home-based business and a brick and mortar business. And a lot of times they'll go about it either one or two ways. Like the first way that they'll do it is if they keep their home-based business, they're a sole proprietor, right? So they'll have their tax return for that. And then they'll have their corporate tax return that technically it should be completely separate. Okay, if you have a corporation and then if you have your individual tax return in your home-based business, you're a sole proprietor, then it should be completely separate because it's kind of illegal if you commingle funds. That's what they call it, if you commingle funds. The other way that people may have it is if you have your corporation and you hire yourself as an employee of your corporation and kind of filter things through like that. So it's a few different ways. I probably need a little bit more information to really answer your question. Okay, so let's see. Sabria, hey Sabria. So if someone works multiple jobs and adjusts W-4 at both, is that a raise at both? Yes, ma'am, absolutely. It should be a raise at both. The only time that people do not see a raise on their tax return, I'm sorry, not on their tax return, on their W-4 after they adjust it correctly is let's say they had their W-4 filled out incorrectly in the first place, right? So let's say that somebody told them to claim exempt on their W-4, and I actually recorded a video. It's posted on my Facebook page, where you absolutely do not want to claim exempt under any circumstances, okay? Unless you are actually exempt. The only people that are exempt are people that make less than $6,300, and somebody else can claim them as a dependent. So if you still live at home, you have a part-time job, you make about $6,000, and your mom still claims you, then you're exempt because your mom is taking your exemption. So that's one of the things that may happen, where people are not seeing a big increase. But besides that, absolutely, Sabria, you want to make sure that you adjust both W-4s and you get a pay increase on both checks, okay? Okay, so let's see. Marilyn, I was asked today if a single person can claim the earned income credit. The earned income credit is really, yes, a single person can claim the earned income credit. The earned income credit is really based on your earned income, right? So it's different thresholds. So if somebody wants to reach out to me, I can kind of talk to them about their individual situation and let them know if they should be eligible for the earned income credit or not, based on how much money they actually have that's earned. But yes, a single person can possibly get the earned income credit. Yes. Hi, Tracy. Yes, there will be a replay on tonight's webinar. The replays, thank you so much for asking. That's a great question. The replays typically last about 24 hours because we do these webinars every week. So by the time that the replay will go out immediately following this broadcast, right? And then it'll last until around this same exact time tomorrow. And then people can start registering for next week's webinar. Hope that was helpful. But yes, there will be a replay. Oh, thank you so much. I'm so glad that you are learning something new each and every week. Dr. Marilyn, I'm so happy. That really makes me happy. I'm really here to serve, and I just love helping people and helping out wherever I can, providing knowledge, providing service. So that really warms my heart. Thank you. So if anybody has any other questions, if you joined us late, then yeah, you definitely do want to check out the beginning of the broadcast, because I started off by going over the top 3 things that you absolutely have to know this tax season. So you really want to check that information out, and you can watch the replay. You are so very welcome, Sabria. Thank you. Thank you for joining. I'm glad that it is helpful. If we have any other questions, then go ahead. Oh, let's see. Okay. Can you write off the portion of what you use at home as well as the location, or do you have to choose one or another? When you say the location, do you mean of your brick and mortar business? Dr. Marilyn, I'll just wait for you to respond to that one. I want to make sure that I answer your question correctly. So if it's for your brick and mortar business, then it really depends on how you have your brick and mortar business set up. So if it's set up as let's say everything is in your name and it's just a sole proprietor, or even if it's not, okay, even if it's not, if everything is completely, you're a sole proprietor, you got your home-based business over here and you have your brick and mortar business over here, you want to account for all of your revenue, then your expenses, right? And then the bottom is your net loss or profit, right? Profit or loss, depending on what you have. So, oh, you are so very welcome, Jeremiah. Thank you for joining. I'm so glad you joined. Thank you. So you have your net profit or loss, right, on both of them. So to answer your question, yes, absolutely, you would deduct either, whether it's part of your home-based business, then it's over here, and you're operating your business from your home, in which case you have your home office deduction that we get to take advantage of as a home-based business owner, right? So then you deduct your percentage of your mortgage, a percentage of your rent, a percentage of your utilities, et cetera, et cetera. But then on this side, you have your brick and mortar business, and then you do the same exact thing, because now for your brick and mortar business, it's not a percentage because this is your entire rent. Okay. So if you make, I don't know, even if you don't make anything, whatever you pay for your rent is tax deductible. You don't pay taxes until you make money. Okay. Period. You don't pay taxes until you make money. So when you have your, and that's really the main benefit of being a business owner, right? When we have a job, like myself included, right? We have a job, they take our taxes out right up front. But when we have our business, we get paid up front, and then we get to deduct every single thing. So yes, your rent or your mortgage for your business, your lights, your gas, all that stuff is a tax deduction. The problem with a brick and mortar business, or one of the things that can be a problem, is that it can get really expensive until you kind of build up your clientele. But that doesn't mean that you can't write that stuff off. Okay, so I hope that that was helpful. Do we have any more questions before we get out of here? I don't want to keep you guys too long. But yes, please, if you joined us late, make sure you check out the beginning part of the broadcast where I went over the top 3 things that you absolutely have to know this tax season. Oh, if anybody on here needs their taxes done for free, please feel free to reach out to us at INeedHelp@AmmaTheCPA.com. Again, it's INeedHelp@AmmaTheCPA.com. And what we'll need in that information, in that email, is your name, your phone number, and your zip code. And we can pair you up with somebody that can do your tax return for free. So please reach out to us. If somebody put you on this broadcast, then you can reach out to them as well. So like I was saying, so really quick to wrap this kind of up, on the back side of the W-4, we went through the different deductions that you can claim to go against your income so that you don't have to pay taxes. You are so very welcome, Dr. Marilyn. I appreciate you. Thank you. So we went over the deductions that you get to deduct from your income. So the first part was for mortgage interest and things like that that are on your Schedule A. Line number 4 is specifically for if you have a home-based business. Listen, if you do not have a home-based business, do not fill that part out, because we do not want you to end up owing the IRS at the end of the year, okay? That's specifically for home-based business owners, because like I mentioned, we get to deduct so many different things from our taxes that it's almost crazy. We actually get to deduct and write off, which means reduce our tax liability by the same exact things that a brick and mortar business gets to write off. Okay, but the benefit in that is that we don't have that overhead. So let's say, you know, for our home, we're paying rent anyway. We're paying mortgage anyway, right? We're paying for our cell phone and our Wi-Fi anyway, but now we get to deduct a portion of that. So that's why even me as a certified public accountant, I've always had a home-based business, because it's one of the main things that you can do that can help legally lower your tax liability, okay? And the business that I'm a part of is called My Econ. It's Nove, powered by My Econ, right? And the reason that I love this one so much is because we strictly focus on finances. Personal financial success, right? A lot of people join these different businesses and even have their own businesses because they want to make money, right? Let's face it, we all want to make money, but it doesn't necessarily mean selling a bunch of tea or a bunch of juice or a bunch of, whatever, right? So we really just focus on the finances and really help people get to that stage in their life where they can start to invest their money and really make their money grow for them. So it's one of the things that I'll always stand by, and I absolutely love it. If you have any questions about starting a home-based business, feel free to reach out to me if you saw it on social media, or if somebody put you on the webinar, then please reach out to them. And like I said, do not adjust your W-4 and don't start your home-based business, okay? So you want to make sure that you do that. And thank you guys so very much. Thank you, Dr. Marilyn. I appreciate you so much. You are so welcome. And if there are any more questions, then feel free, just inbox me on Facebook or Instagram. And that's it. I'm AmmaTheCPA. I can be reached on Facebook at Amma Nantwi. It's NANTWI, or IG as AmmaTheCPA. So you guys have an amazing, amazing week. It's Monday, so which means we have the whole week ahead of us, right? So I will talk to you guys soon, and I hope this was, oh, yes, I'm sorry, I got one more question. If someone adjusts their W-4 before joining a home-based business, can they fill out the back page beforehand? Oh, yes, absolutely. Absolutely, Tracy. Thank you so much for asking. So they can adjust it beforehand, but then you want to hurry up and start your home-based business because you don't want to owe. So literally when you get that first paycheck that has the raise on it, then you want to go ahead and start your home-based business right then and there. So thank you so much, Tracy, for asking. Oh, thank you. Thank you so much for reminding. I appreciate you. You are so very welcome. Okay, so if we don't have any more questions, we'll go ahead and get out of here. I appreciate everybody for joining. Please spread the word. Let's change the world, right? People need to know about this personal finances, okay? Thank you so much. So reach out to me anytime. Love you all and have an amazing week. Talk to you soon.